Good afternoon, guys. It's Workin bringing you a very quick update on Bitcoin. Hope you guys are having a wonderful afternoon. And for those of you that celebrate Christmas, Merry Christmas, guys. I did realize this is a Christmas update, but we did have a little bit of price movement, so I'm giving you guys just a few minutes of my time here to give you an idea of what exactly is going on. We're looking at Bitcoin, guys. We were sitting up here yesterday. Price was sitting just above this 4120 zone, and I told you guys that was looking fairly healthy. We had just broken above here, guys. On the 4 hour, we switched over to the daily, and I told you what I wanted to see, guys, was this daily candle close above this 2140. I told you if the daily candle closed above 2140, be a very bullish sign that this thing might continue. We did not see that. While we did have price come up here and create a new high relative to this prior structure here. Obviously not relative to here, but relative to our little microstructure here, created a new high. The bears were able to push it right back down, and fairly significantly. In other words, we have this like strong reversal candle here on the daily, and of course they pushed back down. Now, zooming back into the 4 hours, I was telling you yesterday, guys, I'm not as concerned. In fact, this looks more like the pullback that I was expecting. As I told you yesterday, guys, if this was our wave, our 5 waves up here, if we just pull our Fibonacci here, I told you yesterday, I showed you that it bounced perfectly off the 382, told you that was a very shallow retracement. If it was to continue up, that'd be a very bullish sign, but it was also unusual. Why was it unusual? It was unusual because normally wave 2s, the majority of wave 2s, I think is about 60%, 62%, somewhere around 60 and 65%. I can't remember the exact number, but of wave 2, which this would be a 1 coming down for the 2. This would have been coming down for the primary wave 2. And 60% of those retraced to between the 50 and the 618 fib level. So that was extremely unusual to see that, but nonetheless, if this would have continued up, that would have been a healthy bullish sign. We did not see that. We saw price break down again, which makes me think that this is all part of either a larger wave 1 here, and this was just the final 5th wave. So I'm looking at something like this if I put my Elliott hat on. And again, I don't like Elliott wave in low volume markets. I don't like it at all. But if I am looking at this, putting my Elliott hat on, we're looking at maybe a very small 1-2 up for the 3, 4, and then a very truncated looking 5th wave here. No, not just a shortened 5th, I should say, not truncated, but a shortened 5th right here, which is not unusual to see, especially with Bitcoin, these shortened 5th. So if that is we could count it that way. That is a real possibility. If that is the case, we'd be coming down for the 2 now. The other way we can count this, and I think a more probable way to count this, is looking at this as a 1, 2, 3, 4, 5. So our initial count of 5 waves up was correct, and we are now looking at an ABC correction here, A, B, C. Now, people are obviously initially going to say, well, the B wave comes higher than the 5th wave here. Is that allowed? Yeah, that's allowed. You can have that. You can have an extended B wave. Elliott does allow for that, guys. It's not very common, although it's also not unusual in low volume markets like this, which we're obviously seeing. So, again, if I am going to put my Elliott hat on, which again, I do not like doing at low volume markets, I'm just taking this with a grain of salt. This is why I haven't analyzed Elliott wave in a long time. But if I am looking at it like this, guys, this looks to me more like to be the case. We're looking at an ABC coming down for the C now. And where is that C going to hit bottom? I think if this is the correct count, and that's a big if, but if that is the correct count, I think that C is going to hit somewhere between the 50 and the 618 fib, as I talked to you about before. So that being said, we are still going to count this as our top. We are still going to count this as our top here. And if I look at this, and remember, this is an extended B wave here, so we're not counting that. We're measuring our Elliott right off of here. And if that is the case, guys, we can see that we're coming down and hitting almost, not quite reaching it, but hitting almost perfectly off the 50 right there. Now, other people, they may count this all as the 5 wave structure, and if that is the case, and I just raise this up just slightly, we can see that we are hitting the 50. So either way, it's a minor difference. So the difference is going to be are we going to see another wave up followed by another wave down? Is this the A, B, and C, or are we looking at now the A, B, and we're on the C wave now? We're going to have to just watch and wait and see how this kind of plays out, guys. As of right now, but either way, guys, I can see a very valid Elliott count here. Again, if I am going to use Elliott at all, I can see a valid Elliott count here. But the bottom line is, guys, we're really going to be just looking, if I throw all Elliott aside, I just go back to fundamental TA, which is this is my bread and butter in low volume markets, guys. You just go back to the fundamentals. You look at your fib levels, you look at your support resistance levels, you look at your volume, look at all those things like we've been doing. So if I look at this overall structure here and I just measure swing low, swing high of this overall uptrend structure here, we can see we're hitting perfectly off the 50 now. So very likely we're going to see a retracement somewhere in here, somewhere between the 50 and the 618 fib level, and we're going to be looking for a bounce. We can see it's bouncing off perfectly right off the 50 right now. So I wouldn't be surprised to see price possibly come down a little bit lower, maybe even wicking down here into the golden pocket to the 618 fib level, or even finding a bounce here. As of now, it doesn't look like we are getting much of a bounce, so very likely we're going to see price come back down for at least another retest of the 50, possibly even lower, hitting the 618 fib, and then heading up. But what I don't want to see is a decisive break below this 3,800 to 3,600 support. So in other words, I don't want to see a decisive break below 36. We can wick below it to touch that 618 Fibonacci level, which is sitting right below 6,300. I don't mind a little wick right below, but if we get a decisive break below that level, guys, I'm going to start to get concerned that we're coming down much, much lower. So again, these are just things that I'm going to be keeping an eye on, guys. As long as we maintain above 3,600, guys, I'll be cautiously optimistic that this uptrend may have some legs and we may continue. The only downside is, guys, I just refreshed this and we're only sitting about 6.1 billion on the day. That's a downtick from yesterday in volume, so volume is dropping off a little bit. That being said, if we come over here and I look at my longs versus shorts, longs have fallen off the board here, which if you're looking for price to go up, that is actually a good sign. That could send prices back up again. Longs were stacking as price was going up. Typically when you see long stacking with price going up, with price going up and in a low volume market, typically when you see all three of those things, market makers end up bringing price back down to liquidate those short positions. That's oftentimes what happens. So I told you yesterday when we saw long stacking here, I said I didn't like to see that. I said I wanted to see longs taking profit as price went up, and we weren't seeing that, guys. We were not seeing that. And in that low volume market, very oftentimes we see price come down, and that's exactly what we had. Price came back down, liquidated these longs, and so the fact that we have liquidated these longs, and if we look over at shorts are slowly starting to stack here. Nothing too significant, but a slow stack. We have a nice margin, a nice gap between longs and shorts right now, and so that tells me that there's a good chance that market makers may just bring price right back up to try to either liquidate these short positions or trap people into a long position in low volume market. However, if they're bringing price up and if we get that increase in price along with a very relevant increase in volume, that's when I'll start to get excited and think that this thing might have some legs. So for now, guys, I'm going to be watching this 3,800 to 3,600 zone to see if it holds. If it does hold, I think there's a very good chance we're going to come back up and retest these prior highs. And if we can decisively break above, if we can get a daily candle, let me go back out to the daily candle since we are referencing the higher time frame. As I said yesterday, I want to see a daily candle closing above this 4120 zone. If that happens, guys, things might get bullish very quickly. The opposite is also true. If we get this daily candle closing below 3,600 here, things might get bearish very, very quickly. And especially if we come back down into this 3,400 to 3,250 zone and get no reaction at all. If we wick into it, then okay. But if we come down to this zone and get no reaction, no major bounce between 34 and 3,200, there's a good chance that we're coming back down and at least retesting the 2018 low down here at about 3140 on Coinbase. It was about 3140, 3130, somewhere thereabouts, guys. And again, that was low on Coinbase, slightly different on different exchanges. But again, I want to see 3,600 hold. And to the upside, I want to see a decisive break above 4120, a daily candle closing above 4120. All right, coming over and looking at our moving average and exponential moving averages, let's go out to the daily. We can see that price just dropped back below this 21-day EMA. Now, we haven't closed below there yet. If it does close below the 21-day EMA, guys, obviously that's going to be a rather bearish sign. And if we get a daily candle that both opens and closes again tomorrow below the 21-day EMA, obviously that's going to be a decisive break below that 21-day EMA. And as you guys know, just like it was a signal of a short-term uptrend when we did break above this 21-day EMA back here, as I told you about, we did have that price, that uptrend. We went from 37.20 all the way up to 42.26. So we had a very nice nice temporary uptrend. The opposite is also true. If we get that daily candle both opening and closing below this, back below the 21-day EMA, that's typically a good signal, at least in the short term, that prices are going to come a little bit lower. So again, just it's not the only thing to watch, but it is one thing to watch, and it typically works out. It is a very good clue, especially if all the other things are remaining the same. It's a very good clue, a very good thing to watch here, guys. So again, watching this, see if this daily candle can close below this 21-day EMA. If it does, things might get ugly. If we can get back above the 21-day EMA on the daily and it does not close below there, this thing might still have some legs, and we'll have to keep an eye on it and see where things go from here. The other thing I'm watching, guys, and as I've been pointing out to you guys, this golden pocket right here between the 618 and the 65 fib level, right in here, guys, we still have yet on the daily. Remember, we're looking at the daily chart here for this overall structure that I've been pointing out. This 618 fib, this golden pocket between the 618 and the 65 fib, still has not been decisively broken above. As I said yesterday, we had that daily candle opening above here. I said I wanted to see that decisive break above, but we did not get that. The bears pushed it right back down. So again, all eyes are still watching. It's amazing how strong this resistance has proven to be, right there at that 618 to that golden pocket between the 618 and the 65 fib level. So we really need to see price breaking decisively above there, a daily candle at least closing above there, but preferably opening and closing above this zone for things to get bullish. Right now, guys, this major rejection that we just had and the drop off in volume, guys, are not a good sign of strength at all. But again, we are still within our zone here between 38 and 3600. So all hope is not lost yet. Just kind of watching and waiting. As far as trading, I would not be entering into any position at all at the moment, guys. I'd just kind of be sitting on the sidelines, watching and waiting to see where price is going to be heading next. Unless you're dollar cost averaging in for the long haul, and as I have always said, guys, if you're looking to hold for a year or more, dollar cost averaging in at these prices overall is not a bad idea. So I'm going to go ahead and wrap things there. If you have any comments, questions, suggestions, please let me know in the comment section below. As always, would appreciate an upvote if you have enjoyed this content. Till next time, guys, please trade safe, take care of yourselves. Merry Christmas. This is Workin, signing out.